Welcome to DeFi Expectations. We're excited for another great episode. As always, none of the things that we discuss today are financial advice or legal advice. We're just talking. So, in physics, the observer effect tells us that the act of observation alters the outcome. What if the same applied to economics? What if the way we observe, measure, and engage with value, with assets, actually shapes the very future of wealth creation? Today, I'm joined by someone who's been observing markets longer than most of us have been in the space, maybe longer than some of us have even been alive. Matty Greenspan. He's not just a trader, but a translator between traditional finance and the future we're building. We're here to talk about quantum economics, real-world assets, the whale club, and how Solana-based QE could shift the paradigm of value itself. Great to have you, Matty.
Yeah, thanks for the warm intro.
Yeah, absolutely. And I've been following you since DeFi summer, but I'm very aware that your history goes back further than that. For people who don't know, can you just share a little bit about your background, how long you've been in the blockchain space, and what excites you, and what's your work and role with QE token?
Yeah, absolutely. Well, I've been in the market since I was 13. I have a trader's license in the European Union. I've been in Bitcoin since 2013, and building quantum economics since 2019. So yeah, quite established at this point.
Excellent. No, it's been exciting to see, because I've seen you on so many numerous content pieces. I mean, I've seen so many different YouTube videos where you do everything from like trading analysis. You've been on different news outlets, basically talking about like the trajectory of Bitcoin and things like that. I guess from like a philosophical point of view, like what kind of draws you to blockchain technology? Is there some kind of resonance you see in this community with your values or with sound money?
Yeah, absolutely. I mean, blockchain is well, the internet itself is a vehicle of freedom and democracy, and it's a powerful equalizer. Suddenly, everybody has access to information at the speed of light, and it's a beautiful thing. We've seen a lot of wondrous stories of what that sort of access to knowledge can do. Blockchain is an extension of that, and it basically brings freedom to finance, whereas before blockchain, financial financial companies basically ran the world, and governments and banks and whatnot. And now, since Satoshi invented Bitcoin, we now have the power to own our own money, and that's been extended to true ownership of anything that has value on the internet. And so it's a beautiful thing, and it's something that is absolutely going to have a huge impact on the course of humanity going forward.
Oh, I agree with you 100%, and the thing about it to me too is when I first got in original projects like Badger DAO during DeFi summer, and just starting to work a lot with Ethereum, which was kind of my main focus then. But meeting these very like libertarian OGs in the Bitcoin community and some of their belief systems and stuff, it really influenced me. But it was also like realizing, you call it the great equalizer, right? It's kind of hard when we get to a certain point in society where it seems like there's kind of like a monopolistic control of certain entities. It could be companies, it could be actually assets like that, the very money that our systems are built on. And it's hard because as long as you're building on this money that's essentially compromised, whether it's governments can print it out of thin air, whether it's already, the power and the control is already under the hands of a select few who actually manage these processes through governments, through whatever, to actually control these financial tools. it does feel like a bit of an equalizer when you have this currency come out of nowhere, right? It's like an alien produced it, this strange man Satoshi or woman, whoever, right? Non-binary individual, who knows, right? But like,
we know.
yeah, yeah,
The the identity of Satoshi Nakamoto is known to those who study.
interesting. Yeah, I'm actually not too familiar. In fact, until recently, and if there's anything you want to elaborate on, not that we're gonna literally dox the person on here, but like if there's anything you'd want to share about that, I'm still becoming more acquainted with Bitcoin myself, coming from the Ethereum community. When I got into these communities, I was in a completely different place, and all I thought about was, well, energy efficiency, and Ethereum must be more energy efficient. Now I'm learning Bitcoin solves energy problems in many different ways. But yeah, I'd love you to elaborate on that a bit.
You got to research it. You got to come to it on your own. If I hand you the answer, it's not gonna be the same. But I have certainly published articles on it. There's just one name that keeps coming up, and I'm at this point 98.5% certain that is the creator of Bitcoin, and we know his identity. And yeah.
Wow, fascinating. No, I'm gonna definitely take a look into some more of your work and see what I can how I can get started on this mystery for sure. No, I'm excited. So bringing it back to, it's basically talking about like democratizing access to financial tools, right? And when we saw this advent of DAOs, that was one of the things that I really loved, because some people have become so dismissive, and cynical about democracy, right, and how much it really works. My uncle used to tell me that democracy is three wolves and a sheep deciding what's for dinner. It's one of his. And
Right.
but then
Right.
you look at the DAO model, and you look at how you actually have people with token communities influencing the direction of a project. You also have, I mean, even before tokens are issued, even before, when you just have a community and you have people coming together because they actually care, if you can imagine that, like not just because of the financial aspect, but you'll see people literally pour more hours than they ever would into any other kind of job just because they believe so much in what they're doing. So when you talk about democratizing reach to these financial tools, when you talk about that sense of community, can you tap into that a little bit as to how it applies to quantum economics?
Yeah, I mean, quantum economics is at its core a community of builders of the future of finance. So, um, developers, CEOs and board members, content creators, investors, and many other categories that, but very talented people coming together and building out a lot of different products and companies under the umbrella. um, no, it's been an amazing journey. I mean, we've been going since 2019. So yeah, it's nearly 5.5 years. And just lately we've seen a mushroom cloud of activity, especially due to like vibe coding, and now anybody can build anything. But obviously, there's two caveats to that. Not that anybody should just build anything. You have to do it the right way. You have to make sure that there's proper security going into it, and there's regulatory considerations. You don't want to get in trouble with the wrong people. You want to make sure that everything you're doing is correct. And those are not necessarily things. Neither of those are things that AI can essentially help with, and you need people to lean on. And number two is that not every project should launch its own coin. Not every industry should. We saw Dentacoin, right, coming out in the ICO boom. Like, no, dentists don't need their own currency. It's has always been a ridiculous thought. And so the idea with QE is that everybody can have a token that they can immediately integrate into any project. It was a fair launch token, so nobody is controlling the supply. Quantum economics ourselves maintain less than 10% at this point. for operations, which is an investing contract. And so anybody can purchase QE off the market, build on the platform, and enjoy from the entire network and all of the resources that are at our disposal collectively.
Fascinating, and I agree with what you're saying. That expression, with great power comes great responsibility, right? And I've seen, especially like coming out of DeFi summer, lots of projects that it's almost like they were trying to solve a problem that didn't really exist, and taking sometimes millions of dollars of investors' money to ultimately sometimes not even launch a product, or to have this token that's meaningless and doesn't create real value. And it seems it's obviously very different. I mean, obviously I'm a holder of QE as well, but what I've seen about this community is not just the intellect of the people who are involved. Like, obviously there's yourself, but like we have in the Whale Club and beyond, just so many people who are constantly participating and doing what they can to help, to support the future of the project, to get into things like real world assets, which we're going to be talking about as well, and creating really interesting investment opportunities to where you're not just holding some kind of token that has no meaning. Like, there's actual value behind it. There's actually a community. They always talk about, like, it's about the community, but like it kind of becomes this thing that people can become dismissive of it because it's like it's overused. It's like saying, oh, our project uses NFTs, or our project just has a token. People become dismissive at a certain point. But you actually like take a look at what's here. You take a look at the website where you can actually like scan across the globe and see all the people all around the world, different beliefs, different backgrounds, but who are united by blockchain, who are united by the economic and financial and community incentives that are definitely inherent to this project. It's super cool. So when it comes to quantum economics, clearly it's not just a name to you or to this community, but does the concept of quantum here relate to probabilistic thinking, to uncertainty, to building in superposition? Like, tell me a little bit what that means. Let me go ahead and see if I can add your screen here. There we go.
Yeah, so this is our website you mentioned, with all the people on it and various projects circulating the globe. We've just added an entire content hub, which is down over here behind our faces. But basically, you can see we have several media partners, including Bitcoin Live, Beyond the Block, and Deorganized Media. And so we're putting out a lot of content, a lot of articles. We have a lot of reporters. Reporters often come into our Telegram group and say, hey, who can comment on this? And whoever provides good commentary can get their name in the news. Yeah, easy to join the network. You just click the button, add your name and your email, and location on the globe. You can't be on the globe without pinning a location. We'd physically have nowhere to put you. And then so once you fill out the profile, you'll get a welcome email that has a link to the private Telegram group where anybody can join. I mean, to answer your question, I mean, quantum economics is a name that I came up with, I want to say around 2013, when Tumblr was popular, when Yahoo bought Tumblr, if you remember that era.
I
And
do, yeah.
we were all on that for a little bit. And I said, actually, I was at eToro at the time. I've been at eToro for 7.5 years. I was the senior market analyst there. And we had a lot of guests come in, and one of the guests came in, talked to us about quantum physics. I mean, I'd never really heard. I mean, obviously you heard the word quantum, but never like thought about it in any sort of practical application sense. And he taught us about quantum computers. I mean, think about this. Is like 13 years ago. Nobody was talking about that sort of stuff. And he said one thing that just blew my mind. He said, well, in quantum, like when you bounce a basketball against the wall, there's an actual probability that it's going to go through the wall, right? Like, what? How could a basketball go through a wall? And then he said something along the lines of like, quantum can really apply to any field or anything. And I said, even economics? He says, yeah, of course, even economics. Obviously, I've been an economist for as long as I can, as long as I know myself. And so I just said, yeah, that just seems like a great name, for a blog, and people really liked it, and it kind of stuck. And when I left eToro in 2019, I incorporated it as a company.
That's really fascinating. Yeah, my first foray into quantum economics, because you'll hear about it in passing. I feel like it's a great talking point for I heard it in like different kind of mysticism kind of teachings. I was going to well, actually, I was part of an AA group at one point, and they would the person who was running the group essentially had this speaker that he would always put on in these tapes and stuff called Dr. Quantum, Fred Allen Wolf. And he would get into things like the connection of the mind, your perception of reality, and so forth into quantum physics, right? And so I started to kind of look into that. And while I particularly like his point of view with regards to that, sometimes you can really go down the rabbit hole with I guess, how far people take that in terms of its applications and how scientific it really becomes at certain points. But your point is well made. Yes, when you bounce the basketball off the wall, there is a probability that it'll go through the wall. There may be a probability that the wall explodes into flames. It's a very unusual space to really explore, because you're realizing what it means for superposition. It's the idea that on the quantum level, at least, before it reaches the observer, the person who sees it, witnesses it, and all these probabilities, these possibilities collapse. Your things exist in a wave, right? And you're like, what the hell is a wave? You see the diagram of an atom, right? And you see the electrons flying around. And now that I'm like looking at the globe and thinking of this, the connection becomes a little bit more real with us kind of being the electrons around the globe, right? That might be one way to kind of think about this. But when you see the diagram, you see the electron in one position floating around or whatever, right? But the reality is the electron is in every position. It's
Right.
us observing it that collapses it and makes it into one. And that's a really fascinating concept to build a not just token project around, but a full suite of like financial solutions with a community behind it. Like, it totally makes sense what you're doing with this platform and with this token. And that's why I was like pretty intrigued by it, and I was like looking for my opportunity to get in, and was really excited when I finally did. So, like we were talking about, this observer effect, measuring something changes it. How do you see users, holders, traders, analysts changing the path of QE by participating? I mean, not just the whale club, but beyond.
Yeah, absolutely. I mean, every single participant in the network has an opportunity to change the network fundamentally and in their own way. And depending on what it is that they do, what it is that they're into, and how they interact with not only the token, but the projects that are building on it, or even create their own project. That now we've got the launch pad, and anybody can come in and hit the button, launch a project, and that just fill out the application here, and we take those extremely seriously and follow up with every single person. And we've got about a dozen projects in the pipeline that are still unannounced right now, where we're helping founders, build it out, and giving them real guidance, because we've brought a few projects to market already. And yeah, and so everybody can use a helping hand here or there. And what people get by integrating QE is that every single participant in the network, every single person who's holding QE, becomes an advocate of your project, because your success is now their success. So we all tie our future together as a community. And so activity in the network, writing an article that's published on quantum economics, Twitter or Medium, um, just even engaging with a tweet or showing up to a space, that all contributes value to the network, and that value can be ascribed directly in price by the market, and it's a beautiful thing.
Yeah, absolutely. I agree. And that's really interesting because again, you take something from the level of, you have things that are just meme coins out there and you have people in, Telegram rooms who are just watching this price bot go on and they're just they're shilling, they're doing their raids and stuff. But often there's not really real value being created. And that's very much the opposite of what I can say is happening with
It,
QE. Just as a person who's
it's not only Fry, it's not only that there's no value being created. 99% of the time, it's value extractive, meaning that the people who come in, at the later stage are basically paying whoever set up the system. And that means like VCs are going to come in, they buy tokens before they ever launch, before people get a chance. And I even saw a recent analysis that basically suggested um, that the entire slump of today's altcoin market is only the effect of the deleveraging of the 2021 DeFi summer, where all of these altcoins were created by insiders and KOLs as a payday and a value extraction mechanism. And and the beautiful thing is that that cannot happen here. It's absolutely just impossible because it was done, as a fair launch, and there's nobody sitting there controlling supply. Anybody who bought tokens obviously is free to sell them, including myself, whenever they want to. And that should not be shamed. Obviously, everybody has, um, reasons to buy and reasons to sell. But the point in my mind, you say token or NFT or a stock or an ETF or any financial instrument, the point of it always should be to allow somebody to contribute value, money, in order to generate value, the creation of products and services, or the expansion of those products and services. And then when either to hold that value in perpetuity and watch it grow over time, or to extract it later on down the line once that value has been accrued. If you think about like Warren Buffett's whole thesis, like, there's you can't, time in the market is better than timing the market, right? You want to hold something over time. Um, and that's how you see the best compounded returns. But even for a trader, right? I mean, you can look at the chart of QE, right? You pull it up and say, okay, well, yeah, I mean, it started off over here, went up here, come down here, and we say, okay, here's a high and a low, and we definitely have people who are trading on this coin, buying the dips and selling the rips, and that's completely fine too. And that also adds value to the network, which is why, in the beginning, there were people who came in and started shaming people. Look, that wallet sell. Who does that wallet belong to? Come on, guys. The price is 700K. That's fine. He's allowed. Let the guy take some profits off the table. That adds value to the network, and he will of course buy back in later when it's lower, and that's fine as well. So there's no there's there every about it is good, because there's like the point, the like at the underlying fundamentals are that there's no VC, that there is no KOL that's coming in to take the value out, or coming in as an insider. And that's why when the yappers started happening and they started like contributing a lot of value to quantum economics and writing reports and essays on quantum economics and what it is that we're building, it really excited me that, people from developing economies who are underprivileged for the most part compared to most of the other great nations, um, are essentially getting a chance to come in at a price point that is so early, and before any major KOL has even staked their flag and said, yeah, I'm supporting this project, are able to basically get in early and contribute value, and to see the fruit of their labor. So to me, it's just a beautiful thing all around.
Yeah, I love so much of what you said. I mean, and it's something that I can say as somebody and I hate using the term, right? Because to me, it's definitely not a meme coin. Like we have like a real project here that is doing real things and creating real value. But when you compare it, right, to these, you talk about like these insiders who come in on various projects, and you talk about basically extraction of value, which is the greater thing than just wasting your time and participating in something that's, oh, we're shilling, we're doing this and that, but what value are we really creating to the space? But also, what value are we extracting from our holders who are coming in now, right? And we see these pump and dump tokens all the time. We have that New York City coin that was launched the other day. I mean, my God, like how crazy is that? And they talk about a goal like combating anti-Semitism, and they pair that with the financial scam. You're like, dear God, like these people have no souls. But what you're talking about is basically being someone's exit liquidity, and nobody wants to be some insider's exit liquidity. It feels like real shit to have that happen to you. So what I love, I mean, I'm a recent addition to the community. It definitely still feels like an early time to come in, and like you were showing with the charts and stuff, like there's going to be highs and lows and all that. It's still very much like a community driven project, where you don't have ridiculous like KOLs coming in trying to pump it to the moon, so to speak. But that's kind of where the charm and the value lies. The other thing to me, and we've talked about this privately too. I said, the whole issue with any kind of token is people are kind of like ingrained in thinking the only way that I gain value from this project is ultimately to sell, right? I bought in low and I sell high, right? But it's there's another side of that too. It's like, well, if the value is the community, if the value is the relationships, if the value is the access to financial tools like real world assets, and we've got things like oil and so forth, properties that you can actually invest in through QE. I think that's pretty substantial. I was going to ask you though, as a Bitcoin OG, right? You had a lot of options in terms of, with your extensive knowledge, and with probably what I would say is definitely some Bitcoin leanings, in terms of preference. You had a lot of options in terms of like what network you could launch QE on. What would you say was the reason to choose Solana, in particularly working with Pump.Fun, and just what was kind of the reasoning there?
Yeah, it's an excellent question. And initially we did launch on base, using BankerBot, and basically it was launched through a tweet initially. And it became clear to us that the smart contract that was used by the bot was actually very flawed in its value extraction mechanism. And there was a lot of value extraction happening by companies and individuals who were not planning on ever being part of quantum economics or what we're building. And to me, that was basically a hard stop. I said, we can't have people coming in and constantly dumping on our community, just because they happened to be involved in a roundabout way through the creation. And so, Pump Fund, actually, the way that their fair launch is done, to me always seemed like the right way to do it. They're very ideological as far as, you know, doing fair launches and how they should be done. There are creator fees. Those creator fees, so far, 99% of them have gone towards buybacks of the token. But the point is, and just that alone would not necessarily have done it. But the kicker was Solana's ease of use, right? Base is very complicated. If I try to, you know, imagine explaining Base token to my dad, right? And it was like, okay, you got to have Ethereum and you got to have Ethereum on Base. He's gonna throw up his hands. And I have no idea what I never understood that. To me, it was like you might as well just have a different network entirely, rather than, you know, having Ethereum on Base. Like the moment I saw my MetaMask with Ethereum on Ether and Ethereum on Base were side by side, and them not being joined together, that was a moment when I realized that this is pure retardation. So not only Solana doesn't have that, it has extremely low transaction fee, extremely low latency. So for example, we have play to earn game, Quantum Smash. People can spend you know, they can spend their QE in the game while the game is happening without us. I mean, there's two ways that you have play to earn. You either have the game itself has a wallet where you deposit money into the website, or the better way, more pure way, which is the way we are able to do it because of Solana, is that you hold it in your wallet. And this is actually extracting, it's connects my wallet and says, this is my balance of QE that's actually in my wallet. And then when you make a transaction, you get the phantom popping up, and you have to approve the transaction before it goes through. And this is a much greater way because it's completely self-custodial. And there's no if there's a bug or whatever error in the website or transaction, I mean, your balance is safe, and you don't have to rely on anybody else. And it also allows us to have the prize pool, you know, in its own wallet, and that prize pool is basically goes to the winner, on the weekly basis when that happens. So this is not something that we would be able to do, I don't think, on any other blockchain. I think Solana really enables that in a big way, by being and I was a skeptic on Solana for a long time. Right. Let me tell you, like from the beginning, I was skeptical on Solana, especially when the total supply was being controlled by like 6 or 7 VCs, and that didn't make any sense to me. But then what I saw very clearly in this latest round of meme coinery, um, was that the network held up, and the network held up with volumes that far surpassed anything we ever saw in DeFi summer. And in DeFi summer, you'll remember transaction fees on Ethereum went to $300-400 per transaction. And you're like, I'm only trying to send $15 over here. Like, no,
That was
you
a bad
gotta,
time, man.
yeah. And Solana never did that, and it had volumes that were way bigger, and it's still transactions go through, and you like, I laugh when I see like Phantom going, the network is congested right now and your transaction might take longer than expected, and it goes through in 20 seconds. It's hilarious to me, um because the transaction fees remain, and at the end of the day, like, that's what really matters. It's not, is this fully decentralized or not, but it's sufficiently decentralized to the point where we can build on it without having to worry about, what the insiders might do, or how centralized decisions might affect the network. And so that box is ticked in my mind. The rest just becomes, how fast is it, and what are the transaction fees?
I really love everything that you said there, because you touched on a lot of like my inherent questions, right? So, when I was initially looking at Solana like a few years ago, before I even you know, I'm obviously a QE holder now, but I actually started paying attention to a Solana again to hold QE. That's actually why I got my Phantom wallet back on my phone and started paying attention to things again, right? But I remember that time when I was really focused on Ethereum, the whole decision between Solana and Ethereum kind of came down to, well, decentralization, man. Like I'm thinking of like the meme with like the aliens guy, you know what I mean? Like, but basically like that was my go-to thing. Well, I like the decentralization of Ethereum, but I also didn't really like it during DeFi summer when I'm trying to explain to my friend who's trying to get into the space. You know, we were actually on a show earlier this past week, and it was Cheers Finance coverage, Christopher Robin, and I'm trying to get him into the space, and I'm telling him all about Ethereum, and he's like, but bro, like the gas fees I've been hearing about are ridiculous. I'm like, just trust me, man. Like, I mean, I hate saying just trust me, just get in, like it'll be so great. But like this is a 5% yield smart contract, and I'm gonna pay $300 to exit it. How does this possibly make any sense? He did eventually get in and it worked out, right? But I mean,
Yeah.
Ethereum had to solve a lot of problems themselves. And you talk about scalability, right? Like we've seen Solana do some crazy volume and not get anywhere near the gas fees that we've
Yeah.
seen for Ethereum. And I think that's remarkable that they've been able to do that. And we don't have that same issue of, oh, I got to pay $300 to swap something or to send something to my buddy. It's a little bit counterintuitive.
Yeah, and also like we're just getting started over here. I mean, in the white paper, you can see our full intention to build a wallet, you know, and then build our own blockchain. And so Solana is really it's a stepping stone for us so that we can get started. We can get started on something that works very well as we find product market fit on some of our core products, scale those up, and we can, especially you know with quantum assets and the RWA, we start to every client is not only an opportunity, is a learning experience for us to say, okay, this is the information that the client needs. This is how we present the information every iteration. We get a bit closer and closer to the truth where we can start thinking about building out an entire marketplace and you know doing that in the right way where we're scaling up with a solid foundation. So it's really about building the foundations. And you know with Solana, I mean you don't like it's like having a very solid you know steel as your foundation. Like later on you say, okay, well we can think about how to restructure that. But for now it's like we don't have to worry about that aspect of it and say, okay, well what if it, you know, what if the network goes down, or um what if volume on the network spikes. It's not an issue. We can focus on what really matters, which is building out our core products.
I love it. No, that's perfect, and that makes total sense. And I think that's a good opportunity for us to shift to the real world assets part of what QE is. So real world assets, especially energy like gas and oil, are core to your current roadmap, at least as I've seen with the project. Could you walk us through the logic of anchoring QE's growth to these kinds of tangible properties? Maybe any other assets you're looking to add into the future?
Yeah, absolutely. To me, real world assets are the bridge between pie in the sky DeFi that, you know, we're essentially moving gold bars from one corner of the room to the other, right? And there isn't any real value being created by 99% of DeFi protocols. It's just the transaction fees and you know people doing you know flash loans or whatever. That it's all really, it's just pie in the sky. And what real world assets do is they ground it in reality. So until people are you know able to use DeFi to back a home loan or a business loan, or something where they can use the financial asset to create something of value, um, then it really doesn't have much effect. Now, obviously, real estate is like the big prize that any kind of investor or serious person would say instantly, like that is ground, it's dirt, right? It's something that is real world and should be absolutely one of the first things, the largest markets to be tokenized, and would make sense. I mean, a lot of the financial world relies on that and is basically grounded in that. The 2008 financial crisis was living proof of that. You could see like the whole thing was about real estate and about mortgages and everything like that. And so that's the big prize, but the hurdles for tokenizing that market are at this point insurmountable. You can't tokenize a property. You can't tokenize an apartment building in Manhattan. I remember when the first time I heard that concept, somebody put out a video this project was doing. I don't remember what the project was called. They died a long time ago. But the idea of being able to own $3 worth of an apartment building, to me, really it resonated because it got exciting, because now you're opening up that opportunity that was previously only open to billionaires to everybody. And I still think that the world is headed in that direction, but the current regulation and structure of how property has to change hands, and the custody of ownership is preventative of blockchain coming in and revolutionizing it. And so any way that you try and attack that problem, you're going to have regulators that are going to come in and block you. And you definitely don't want to do that. When you do something like this, you want to do it in a way that makes sense and is regulatory friendly. Goldman Sachs and Larry Fink, um, you know, of BlackRock, they've all talked about tokenization, and obviously they've got very fancy lawyers that for $6,000 an hour can figure out how to make that happen for them. However, we have very good friends and fancy lawyers that are quite clever and figured out that, well, and also other friends that we all kind of pitched in this idea that we've been kind of mulling over on Twitter Spaces for years. And we found the apex asset, the absolute quintessential asset that would be ripe for tokenization and regulatory friendly at the same time. And oil and gas royalties are basically a source of passive income for high net worth individuals going back decades. The way it works is that you buy a property, not to build on it, but you buy it for the subsurface rights, basically what's happening underneath the surface, which is the drilling, the production of oil and gas. If you ever saw the series Landman, it really kind of highlights this and how it works. And owning a property is essentially, it's mailbox money. You don't have to worry about the production. It's none of your business. Obviously, the more wells you have, the better, because then if wells dry up or if they go down, you have a diversification. Um, but there's zero liability as far as the landowner is concerned, and it's just basically getting a check in your mailbox once a month. And this also happens to work out very well because when people come into quantum assets and they purchase the rights of the royalties from us, they're not making an investment into quantum assets. They're not making an investment into quantum economics. They're not making an investment into our properties, even. They're not pooling their investment with anybody else. And what they're actually purchasing is a claim on the royalties that are generated from the properties that we own. And so they're able to participate in this market just like anybody who would go out and purchase an actual parcel of land for this purpose. The only difference is they're benefiting from our experience because we know which parcels of land are good and which ones you want to avoid and which ones are likely to increase production over time, which will most likely increase the value of your asset. And we know how to deal with all of the paperwork that's that's associated with this, filings and everything like that, and then um, essentially fractionalizing it so that everybody can be involved, and you don't have that barrier to entry where it's thousands of dollars to purchase a few acres. And so for the user, it's very simple. You just come in, you buy an NFT, and then you get monthly airdrops for as long as that field is producing, which could be hundreds of years. And so this is absolutely a source of generational wealth, with the added advantage that you don't have in the real world of being able to sell it whenever you want to anybody, anywhere, anytime. If you don't want to hold on to it, that's fine. I mean, it's a completely liquid asset. It's an NFT. You could do whatever you can do whatever you want with it. Um, Eventually they will be used also, for creating loans and and that's how financial structures are built up. You can stake your NFT, in order to get a loan, and that represents a real world source of income, which with a steady cash flow.
That's really fascinating. And I appreciate how comprehensive your response was, because not only did you cover another question I had, but you're also talking a bit about the history of tokenization, right? And it affects people at different levels. And I think a lot of us have kind of come to this conclusion at different points, either based on just thinking about it, like, Camilla Russo at it was actually Stellar Meridian. She had a talk where she was talking about we've tokenized everything, now what? And they were talking about this real world asset revolution that was also coming to Stellar, with them adopting the ERC standard, Ethereum's standard for real world assets, compliance and tokenization and all this at scale. But essentially, they had this part where they were talking about the idea of like a home loan, right? Like you have a token that represents your property, and maybe you have some equity in that property and you're able to borrow against it. And this became very real to me. I mean, I'd heard about and thought about these concepts before, but when it actually impacts you and you think about how it could actually like help you, and it doesn't exist yet, it's a bit challenging. I was in the situation where, at least at the time, I had supremely good credit, and I was trying to decide, do I really want to sell my house? I'm going through all this chaos in my life right now. Do I want to sell my house and get the hell out of here, which is what I ended up doing? Or do I want to actually like find some way, since I had 100K in equity in my home? I'm like, why can't I have decent like credit. Why can't I just like borrow against the equity in my home? Why is there nobody who will help me with this? And I'll be able to actually take care of the things that I need to. But in spite of my credit, I was not able to actually get a home loan through traditional means. So I had to actually like look into other kinds of solutions, and it was bothersome to me, because I thought, if only I could just solve this problem with decentralization. If I could tokenize my home, put it on the blockchain, people knew that there was equity inherent to it, surely somebody, a collection of people, would be willing to provide me some kind of loan, because it's collateralized by my house, which has much less money, or much more equity and much more value than even I was trying to seek at the point. Long story short, obviously I didn't get the loan. They would always use this crazy math to explain how I wasn't qualified, etc. And it sucked. And you're like, why can't they find solutions to this at scale? But you brought up the inherent problem to this, right? Is you're basically dealing with something that's inherently decentralized and something that is inherently centralized, like property ownership. And the way those two things work together is something that I don't think has been completely seamlessly integrated with a lot of opportunities yet. And if there was anything I was disappointed about with this talk between, Camilla Russo and this panel of people at Stellar Meridian, I wish they fielded questions, because that was going to be my question: is how do you actually do this at scale? You panel of experts, please tell me, with coordinating decentralization with an inherently centralized process. Think about the financial crisis you brought up as well. Think about when people were losing their homes because they were given loans that they should not have had in the first place. There were people pouring fucking concrete down their sinks. I mean, people were destroying their homes. So think about this. You have a home that has a certain value to it, but when's the last time it was appraised? You have an ongoing loan. How do you make sure the house doesn't depreciate in value? You have other elements of risk where you could have essential liquidation happen if there's a big market downturn, or if you don't have proper insurance, etc. But I wanted to ask these questions and I wasn't able to. But what I love too is to come back to your point, right? So there's two things. One is you guys are choosing to focus on actual real world assets that have a very tangible value to them. They are perpetually generating real returns. And it seems like, I mean, again, everything has inherent risk, and we're not like providing financial advice here, but it seems like investing in oil properties has a more it seems to be a safer bet than some of the other real world asset gambles that you could take out there. And also solving this problem with decentralization, because this is something that places like entities like BlackRock are trying to solve. And they have teams of lawyers getting $6,000 an hour or more to try to solve this issue. We've just got a bunch of people around the world, like you showed, trying to solve this problem, putting our brains together, and look at what we're doing. Like, look at these properties that we have listed and the value that's being created for this community. I think it's a beautiful thing.
But here's the fun part, Fry, because you're talking about very grandiose kind of fundamental issues with how the world works. And I think that is true, and all of that is correct. But when you're trying to launch a product, what's infinitely more important is the granular level, right? Is like the what's in it for me, for the customer, right? Is like when a customer buys or makes an investment, they're not necessarily thinking about, oh, I need to make sure that this investment is done with the purest way. No, you've got cash in your hand and you want to see a return on it. You're afraid of the volatility of some of these meme coins or cryptocurrencies, and you want to get something that's a lot more stable, to the tune of 10 or 15% a year. That makes sense to a lot of people, and that's basically what we're doing here. More than we're doing it in the right way, is that we're opening up access to this market that was previously only available to a select few privileged individuals, and now anybody in the world can take advantage of that in a very simple and real way, through our website. So to me, you have to look at the micro and the macro at the same time, and be sure that they align in a way where we can start out with these properties. Currently, we're actively researching other sort of investments that we can put through this to create the marketplace that we want to put together, which could include precious metals, agriculture, music royalty rights, or essentially anything that counts as passive income, where any holder at home, I mean, they're just holding an NFT. They don't need to think about like what's happening in the oil and gas industry, or what's happening in the music industry. All they're concerned about is ensuring that the money that they've put to work is working for them without them actively having to pursue it, which is what investing always has been and always should be about.
I love it. And also what you're sharing about, like, it's the accessibility component, right? And just how easy it is to do this through QE. I think it's really something special. With regards to tokenization, and some of the things we've been talking about, do you foresee that eventually we will tokenize everything? Art, land, even data? Do you think it'll be easy for these things to be listed with QE? Are you planning to stick primarily with oil, or where do you kind of see the future going there?
Yeah, I mean, I've been quoted in CNBC as early as 2015 as saying that everything that can be traded online, or everything that has a value, can be traded on the blockchain and will be. Um, my mentor Yoni Asia, the CEO of eToro, was in that since 2011. That's why he even got into Bitcoin, was he wanted to tokenize eToro, and there have been several attempts made there. Um, but essentially, yes. I mean, I'm not trying to solve all of the world's problems at once, and nobody on our team is. I mean, everybody's got, their things that they focus on, and we put that together in a very creative way to deliver this product as the minimum viable product. But yeah, obviously, we want to expand that as far as we can, as the regulation catches up, right? Because regulation, like I said, at this point is preventative from doing, those big real estate deals, but eventually it will absolutely catch up, because the forces of nature will cause it to do so, and so we'll continue to remain on top of that. But for now, um, this is absolutely excellent, not only for, the ideologue or whatever, but actually for people who are looking to put their money to work in a real, in a very real way. um can get involved very simply through quantum assets.
Excellent. I think we can turn the discussion a bit over then to the Whale Club. We've talked a lot about the role of the community in the future of this project, and we've also talked a lot about accessibility, right? And I think it's really important to remember that when we talk about the Whale Club, because this isn't just some VIP group that they're the only people managing and controlling everything because they're able to be whales. It's obviously, being a part of the Whale Club has its benefits, and there's definitely some influence you can have there. But of course, the entire community is behind this project. But if you can kind of, um, you know, clarify a bit to the audience watching what you envision for the Whale Club, and beyond just what you envision, how the participants in the Whale Club actually shape its future and the future of QE.
Absolutely. And every holder of QE is shaping the network. I want to be very clear about that, whether they're holding $5 worth of the token or $50,000. However, those who are holding the $50,000 are certainly going to have more privilege and more influence over the network. And particularly because it was a fair launch and nobody has received their tokens through entitlement. Every single person, including myself and including all of the members of our team, have purchased the tokens off of the market. Therefore, the ones who are coming in with a larger amount of capital, or who have been for longer, to the point where the price appreciated for them to be in that position, um, should and do enjoy a place of privilege within the network. And so, the way that happens is you can come and see QE.finance/whale club, or once you're logged in, you'll see the little whale button. You connect your wallet. Once your wallet is connected, it'll verify that you're holding 1 million QE in the wallet. 1 million QE at today's prices is around $450, or when the price is up to 800, so it's $800. Once we pass a million, I mean, it'll be $1,000 to join the whale club. Um, but basically, you're not paying us money to be in it. It's just that you're verifying that you're holding that. And then on a weekly basis, we have a system that verifies everybody's holdings. Um, and if you dip below the million, then we have the whale club bouncer in the Telegram group who's going to come kick you out. So in addition to the Telegram group, there's also a little sign over here on the globe. You'll see the little fluke. Basically, anybody who's a whale member should have that little fluke on their card. And then when you click on the card, first of all, it shows all of the content that you've created. And then, yeah, it's got the whale tag there. For anybody who doesn't want to be publicly identified as a whale, that was concern in the beginning.
I remember that.
Yeah, and so we built out a little toggle button over here so that if you toggle that off, nobody can publicly see that you are a QE whale. Obviously, at today's prices, it's not a big deal. Okay, so what? I'm holding $500 worth of a token, but as we grow into the future, where a whale club membership could be $10,000 or more, people want to be sure that they have at least the option to maintain privacy. For some people, that's important. For some people, not as much.
I love it. No, I love the option to toggle it on and off, because I like to boast. I definitely would want mine on. And I don't think mine is, I haven't connected my wallet to this yet, right? So I think if mine over in Georgia, if you zoom in
There
on
you
me, I
are.
don't know. Do I have the whale on there? I don't think I
No,
have it
no.
yet. I got to.
Yeah, just go to the click the whale button, connect your wallet, and that should put your. If it doesn't, let me know. I'll speak with the devs and make sure that we get you it out.
I'm sure it will. I've been lazy and haven't checked into that since you added that feature. I want to also take a minute to compliment the website. It is so fucking cool. Like, I just love it. Like, it's not boring at all. I love the interactivity of it. I love the whale and the splashing and all of it, and the game. Like, it's so cool the way that this has been set up. Really amazing design.
I appreciate that. I'll take the compliment, but not all of the credit. The design itself is Sinisa Spasojevic. He's a very talented. Here he was just over there in Serbia. He also visits China very often because his son is over there. And that was his design, his kind of concept of like, okay, we're a community, and let's kind of show everybody's place on the globe. And so this is actually the fourth iteration of Quantum Economics website. We went through a lot of various iterations before this, and so you could see, over time, we continuously work and we continuously improve, and you can imagine, and lately we've seen rapid scaling. I think you can just think to yourself like how that's going to play out within the next 5 years and what it's actually going to look like, keeping on top of the latest updates and technology, and making sure that we continue to scale up and add very talented builders and utilize their talents in an effective way where everybody can contribute value. And in the words of Lou Kerner, who's our head crypto analyst, a community is a marvelous place where when it's working well, everybody is able to get out more than they put in.
I love that. Very wise words for sure. And yeah, again, just the design so on the nose in terms of the concept and everything, just executed supremely well. And you hear about projects, iterating on their website, and there's never really any meaningful change. But it's not just the visual look, but also the utility of what you created here. It's definitely fascinating. And to think too, the current market cap of QE relative to projects that will be in the multi-millions, and they're just a meme coin. They don't have a great website. They don't even have that great of a community, or they don't have the value that's being created here. It's phenomenal to think a bit about what the future is going to look like for QE. And that's basically some of my wrap-up questions I have here. Maddie, if you can just tell me a bit about like what excites you most about the next phase of quantum economics. Would you say it's the technology, the holders, or something else entirely?
Yeah, it was a lot of things that excite me very much. First of all, like I mentioned, is just everybody having the opportunity and watching people come in and start exploring the network and everything and say, okay, where can I fit in and where can I contribute? That to me is beautiful, watching each individual go through that and go through that journey, like yourself. It really excites me. It really excites me. And then seeing people find their place and going, yeah, all right, here's my spaces that I show up to every week. Here's, like, this is where I'm giving my opinion because I know something about this field. Or saying, okay, well, let me get a project going. Let me go and pick something up, bootstrap something completely new and exciting, and build something on the network. And my answer is almost never no. Actually, my answer is never no. The maximum I will say, and I do say it often, is it needs more work before we can come in and put our full backing on it and say, okay, let's think about this or that, and not to make unilateral decisions for anybody else, but to just kind of give people the tools and the understanding of this are some helpful suggestions that'll help them formulate how they want to bring a product to market, and how they want to what is the impact that they want to see, and how do you find a product market fit, how do you onboard your first few customers, right? And those can be very difficult things for some people, and something that we have a lot of experience with, and where we can share that experience in order to grow the entire network. I'm all for it. um Utilizing the QE token, I think, is an amazing tool for people, and that absolutely will give them status within the network. Um, and every project is going to use it in a slightly different way. I mean, you can read the white paper for some interesting ideas, granting access, or or special features, or staking it, or using it as the base currency within a game or something like that. But also, any business that generates revenue can always do, at the very minimum, buy back and burn. So saying, okay, X amount of our revenues are going to be used to buy QE tokens and burn them, which is exactly how quantum assets is structured, where 5% of every purchase made on the website is used to buy back and burn QE tokens. And the beautiful thing about that is it creates buy pressure on the token, and that buy pressure will never ever be matched with a sell order. So when people come in and they purchase $1,000 worth of QE, eventually they might sell it, and probably will, right? But when it's buy back and burn, that buy pressure is never sold. It actually adds to the liquidity pool, and reduces the overall supply, locking in a very strict deflationary mechanism, because no more tokens can ever be created, but tokens can absolutely be taken out of circulation, and often do.
Yeah, thank you for explaining that part as well, because that was something I actually forgot to get to. But to summarize a couple ideas you presented here, one, it sounds like you're very receptive to ideas in this community. My father, and its expression's pretty well known, but there are no stupid questions, right? Well, in the space, I would say, with some exceptions, right? But there's not really any stupid ideas, but there's definitely unfinished ones. And having a community that tends to attract such brilliant people like it has, it doesn't surprise me that you don't hear ideas very often that you're like, dear God, where did you come up with this? But more so like maybe it needs some more iteration, it needs some more work. And as somebody with the experience you have, I mean, you're definitely somebody I would look to as someone who could give good advice on where something needs to go next to be investable, and beyond being investable, to be practical, to be useful, to be something that can actually benefit people. I think that's phenomenal. But to your point about this buyback and burn kind of mechanism, and you kind of answered this question for me that I wanted to ask, but in my Badger DAO days, there was a debate they had presented to the DAOs, right? And this was like my first foray into trying to understand some of these technical things, right? And it's phenomenal to me too, like how with Ethereum and different DAO related projects, you have democracy, right? Democratization, but you also have such a high intellect of people working on these projects who are also educating the people who will vote on them in such a very unique and powerful way that it doesn't seem often, at least with the right communities, the right projects, that things just go astray with people making totally the wrong decisions. It seems like often they make the right ones. And one of the debates we had was around buyback and burn versus buyback and make, and part of treasury. So the treasury can be used to ongoing support the project. And I had a person with Badger DAO that kind of pushed me in the direction of buyback and make. And I'm not technically probably skilled enough or prepared enough for this particular conversation to debate you on this. I'm just curious, do you have anything else you want to add in terms of why buyback and burn versus we're going to buy this back and use it in the treasury of QE to add to that 10% or to add to the ongoing growth of the project? Just anything else you want to add in regards to that?
No, it's an absolutely excellent question. And to me, the the entire point is the flow of value, right? And so if it's buyback and make, well, that means that you're going to have to use the coins that you've bought either to pay a developer who's going to sell them, essentially, because they'll need to, right? That's why they're doing it, usually. But they might not. They might hold them and then sell them, um, or sell them yourself, and that doesn't necessarily add any value back to the token itself, or to the community, or to the holders. To me, the buyback and burn absolutely does, because when when you create that buy pressure that's never matched with a sell pressure, you are contributing value back into the network. You're basically saying this money needs to go back. That goes back towards all of the holders. All of the holders benefit. Whereas buyback and make, you might be able to bootstrap it in a way that is going to um, add value back later on down the line, possibly. Um, but in this way, the path is very immediate, and it enforces the deflationary mechanism, whereas buyback and make doesn't have any deflationary dynamics. It just takes from one portion or from one source of income and diverts them back. It's a funnel, possibly at best, but it's certainly not a bucket that's gonna hold water.
Awesome. Thank you so much for explaining that. Yeah, I just have a couple more questions. And thank you so
Absolutely.
much again for your time. So, just over the next 5 years of this project, right? Like, where do you see it going from here? And what do you hope to be able to look back and be able to share about the growth of this project as some evidence of like, look at how far we've come, and let's even think further about what comes into the future.
Fry, I sometimes have trouble seeing what's going to happen in 5 months from now. Um, Technology is moving so incredibly fast, and I know that we're talking about QE today, and not necessarily about economics, which is one of the things that I tend to focus on. We talk about that plenty in the spaces, but I think right now we are in one of the worst economies of our lifetime. And I feel it every single day in the conversations that I have with everybody. It sucks. It sucks out there. It's difficult for people to find work. It's difficult for people to find a job, or any kind of consulting work. People that have, been swimming just fine, or even very well, throughout their entire careers are now finding it very difficult due to AI, generally due to AI and the economy. So they're both working in tandem here as a double pull. And I think that, well, first of all, as the technology progresses, first we're feeling a hit right now because employers are thinking, okay, well, why do I need all of these people when AI can do it? Do essentially this um, for half the or for much less and much more efficiently. But what you find with technology is that essentially you need somebody, it still needs somebody to operate it, right? It needs a skilled person to come and operate it. And that's what we've seen, like when the factory workers were laid off, and essentially later on people come and they've become the automations experts and whatnot. And so that takes time for the market to start building up a demand and for people to build up the skill. And so the people need to build up the skill and the market needs to create the demand. So that's going to solve itself over time as technology becomes a parabola. Um, and I like to think about it as, the AI has absolutely 10x at the very minimum my productivity. I'm sure you feel the same. I think everybody watching here feels the same. I know the yappers felt the same, right? And everybody has basically, we've seen people coming online and joining the conversation that never had the ability to, right? People from countries like Bangladesh or Nigeria who, like, they just couldn't, they just didn't have the ability to come in and join this global conversation that we're happening and now are. And so the effect of everybody, all 8 billion of us, 10xing our productivity has not been felt in global GDP. So that's absolutely going to catch up, and meaning that the value of the output of the world is on a very, very steep incline. And as technology progresses, that's going to accelerate into a world where, like, even within the next 5 years, like you're asking about the next 5 years, we're not able to imagine what the effect might be, particularly with AI, blockchain, quantum computing, and biotech, which nobody's even talking about yet. But biotech is absolutely. I mean, we're working with one project right now in the accelerator that I was like, it excites me even just thinking. I can't sleep at night, like going, wow, this is something that we can bring to market. And like, they came to me with so much passion and so much skill. I'm like, let's refine that into one single product that's sellable, and we came up with the perfect one. And I can't wait to announce that, but we will get to it soon.
I wish
um
I could hear it right now, but I'm excited. That sounds cool.
but the point is that and the Fed. Oh my gosh! Like, I don't want to go too deep into it, but Jerome Powell has been sucking liquidity out of the market since 2022. We are in a very prolonged liquidity tightening period, and if 2020, 2021 was the effect of money creation and injecting liquidity, we've been seeing the opposite of that ever since then. And in the beginning, there was okay because there was so much liquidity that who cares if some of it's sucked out. And now it's at the point where that sucking out of liquidity has absolutely become stressful for every single human being on the planet. And that, I believe, is going to change very soon as well. Obviously, Donald Trump is not going to continue Jerome Powell's position when it expires in May, and we will have a changing of the guard. Whether that changing of the guard is super productive, or we figures out how to meaningfully turn things around, well, we can hope and pray. And that's my hope and prayer, is that within the next 5 or 6 months, we see somebody at the wheel who can absolutely steer the world and the global economy in the right direction again. And but even if we do get that person, it will take them 5, 6 months, right? Because you can't, it's not as easy as coming in, okay, hey everybody, let's turn on the money printer and everything is fixed, right? That has to be done in a sustainable way. If it does happen like that, I mean, yeah, I'll cash in some chips, but I wouldn't have much hope for 5 or 6 years after that. right? And so hopefully we get somebody who can build that out in a sustainable way that'll take some time to proliferate and take some time to actually um, have the right effect. But over the course of the next 3 to 5 years, the world will be on a very steady pace and a very steady path that we can utilize the technology that is being created in a wonderful way that's going to help the economy as well. And for me, you ask where's QE and all of that? Well, we're at the tip of the spear, right? We're sitting here utilizing all of the latest and greatest in the technology has to offer, and using it to make amazing products that resonate with people, and that can be used by everybody, opening up access to markets that were previously closed, or building products that were previously unfathomable. So to me, that's where we're at. That's where we'll always be.
I love it. And thank you for that perspective. I think it's spot on because things will continue to change. It's hard to always predict the future, but it seems like blockchain and where QE is at with that and with real world assets, it's hard for me to see a future where it doesn't come out on top and blockchain doesn't continue to be the solution that it is to a lot of these financial issues that have caused a lot of people to change careers. Myself is a great example. I mean, people are constantly having to reinvent themselves in a world that is in some ways becoming less reliant on them and various skill sets that we used to need before. But AI also empowers us to do things we couldn't do before. I mean, before I went on this journey, now been to 10 countries, I was fearful of even getting on a plane. And it took things like support with AI, to actually help me deal with some of my fears, but also to deal with the planning that I needed to do to go to other countries, not just translating things, but figuring out tax things, figuring out LLC incorporation, figuring out train systems and navigations and so many different things. But it's a beautiful thing that comes from AI. It's also a double-edged sword, right? And it's hard to predict the role it will have in the future. But as long as we have people like yourself, like contributing positively in the space with blockchain, with Bitcoin, with Solana, with QE, that's what keeps me optimistic about the future. Because even if we don't always believe in the central banking system or some aspects of governments, we can at least believe in Bitcoin. We can at least believe in blockchain. We can believe in QE, maybe. So I'm pretty excited about that.
Yeah, me too, man. It's an exciting world right now.
Yeah, thank you so much. I think with that, we'll just go ahead and wrap. So thank you again, Maddie Greenspan, for coming on the show and talking about QE and quantum economics. It was really exciting, and I'd love to have you on again.
Absolutely. Pleasure to be here. I'll be happy to come on anytime.
Awesome. Thank you. Take care.
Bye bye.